Hello, everyone. Welcome to Smart Investing. I'm Albert, the host of the channel, and today we're going to be doing the next 5 bank stocks. Again, this is in no particular order. So, before we begin, I just want to explain something real quick that when I'm going to be reviewing these 5 stocks, I'm going to be doing both fundamental and technical analysis. So, I'm going to be doing both. Again, the platform I'm going to be using is Webull, and I'm going to be starting with this first stock. So the first stock that I'm going to be using is LKFN. Again, it can be either a bank stock or bank related services. They're pretty much the same thing, but they just happen to have like a different name. So, anyways, I just want to show you that they have a similar category. So this is exactly what I'm talking about. You see here banks and banking services. So they're pretty much the same thing, but they're just a related category. So the first thing we want to do here is I'm going to look at the last 5 years, because the last 5 years have been uh, pretty significant as to a lot of gains. So if we look here, if we look at these spikes here, we're going to look at that. And so that's locked in. Now we're going to move this way. So now we want to see what price that is. We're doing a technical analysis here. So that's about 40 had about say right about there. So I had it about 46.50. We could say that's pretty fair, close to 46.50. So we have at least another $20 to go down. So looking at the numbers on this first page, I call this my first page because this is a lot of important information as to what explains this stock. So we have a 52-week high and low of 56 low, 85 high. So that'll be a difference of close to 30. Round it off to 30. I like to round it off. So we have there a $30 difference for the low and high. So that's pretty good. So then the market cap is a small market cap, but it's not a micro cap. So 1.68 billion. That's a pretty good size market cap for a small bank. Look at the PE, slightly overvalued from what I'm seeing. But again, charts can say different, and different results can actually tell you different price measurements and all that. So we're going to continue looking at this first page. So earnings per share is at 3.7, close to 4. That's pretty good for a bank. And then they do pay a dividend, and the dividend they pay for the year is 1.6. Excuse me. So now we did the technical analysis, and now we want to look at a 1 year time frame. And as you can see, it's pretty much going flat. So now we're going to look at an analysis and see what they say about that. So the highest rating for the quant rating that I have is quality. And then the second is income. And third is momentum. I'm going to agree with this one. Momentum, not really. Income, I don't know yet. I don't know if it's good for income. For the stock itself, yeah, it can be good, but you also want to compare it to their peers, like compared to other companies and also overall. So, I mean, I guess it's okay, but again, comparing to their peers, I don't know yet. So we have here a lot of stuff is going on a downtrend, so I'm just gonna assume it's going on a downtrend. So we're gonna skip that. Um, I'm pretty sure they don't do anything special. I mean, pretty much banks just lend out money and then you got to pay a little bit more back. But let's take a read at what they actually do or what kind of businesses that they're loaning out to. So it says they serve a variety of industries, but mainly, I guess this is commercial real estate, manufacturing, agriculture, construction, retail, wholesale, finance, insurance, accommodation, and food services and healthcare. So they're pretty diverse, well diverse. It's actually pretty rare to see a bank that diverse, and not only that, with with all this going on, I'm sure some of them are strong and then some of them are weak, but I can't really tell. That's what I'm trying to explain. So, for example, they might be doing good at this moment in agriculture because food is, you know, a hot trend right now. But then, for example, for houses, for example, construction, then they might not be doing so well as of right now. So even though they have this in the diversified portfolio, yes, it's a good attribute to have on the side, and it's great to diversify. But it just kind of sucks that when you do diversify, sometimes things go up in your favor, and then other things go down. So we're gonna still continue to read about the company. So they also do. It actually says consumer lending. It says retail and merchant credit card, and then it also says corporate treasury management. So they do a lot of things. And then another thing too is that the importance of location. So it says here the counties of northern Indiana. You can see at the bottom right there. So counties of northern Indiana and central Indiana. So it looks like the corporate headquarters are Indiana. So we're gonna look at the dividends real quick. I'm sure many people want to see that, and they will be excited to see that. So we have there 40 cents is the payout for this year. And we have here 40 cents. So it looks like they did do a raise, a pretty nice raise actually. And for the year before in 2020, it looks like they did a nice raise there. And then for 2019, it stood flat, but the year before they paid 26. So this I do not like. They split the ratios for the stock. So they split that price. So I would say this would be a nice stock to watch list. And as for comparing to their peers, you can always look at the bottom of this. So I don't know how accurate that is, but again, just let's see. Let's see if they give me information. Well, not their balance sheet. Um, that's not what I want to look at. I'm having trouble pulling up the annual results and those estimates and all that. It's just not showing me. So we're just gonna go to some statements here. So income statement. Um, so Hold on one sec. Okay, so I don't have anything for annual. It's not giving me annual. So year over year from income statement, net income looks flat. As you can see here, it looks kind of flat. So that's not too bad. I mean, they've been going up and down. Revenue is not showing me, so operating income is not showing me. 89% debt for 2021. It's pretty high. But again, like all banks, I say it in all my videos, they're pretty high in debt because they like to lend out so much money and they usually can pay that money back. So that's how they make their money. They're very high leverage like that. That's how banks are. So we have cash flow for operating, investing, and financing. So we're going to look at those numbers and they do have some cash flow. So I would say yes, this company is a good company to add to your watch list for the long term as well. So we're going to move on to the next one. Next one we have is Tfsl. So Tfsl, so for the 5 year, we're going to look at a 5 year trend. So if we was to start here, so the bottom of 2020, I'm going to take a look at that. So we're going to keep raising it a little bit more until you see a bunch of spikes. So as of right now, that is where the stock is at. But if it seems to go lower, where would be the spikes in red? So that does look like a solid trend line. So that price would actually be about $12 actually. So this company is a over $3 billion company. It looks like they're growing at a fast rate, but their earnings are not as good as compared to other banks. So I'm just not liking this stock. What I can say is I do see that they have positive earnings. I do see they pay a dividend. It looks like they're growing pretty fast. Nice market cap. But this is what gets me there, the 52-week high and low. That's what gets me. And then this right here, to be honest, the actual amount. And then, to be honest, that is a pretty low earning number, especially for a market cap that size. So, for example, if this company was, let's say a $1.76 billion company, I would still like to see this number slightly higher. And again, it's also based on shares, but it's just, different companies manage different ways and they manage their money different ways. So as you can see with the 2020 drop, that's where we're heading to as of right now, close to it. And then we're going to take a look at the rest of the information that we have. So we have here analysis. So we have here the best factor for using the stock is for income. It's showing me income. And they have that rating as a 7.6, rounded off. So, okay, so for 7.6, now we have earning estimates and all that. So it looks pretty flat. I don't like flat when it comes to earnings per share, actual results and estimates. So we have here, I'm sure people love that high yield, but I don't like the fact that they do not pay raising dividends. Regular dividends is fine, but when you invest in a company, and especially if you're trying to get an income portfolio, if all these stocks are not giving raises, don't expect to earn much because these dividends are pretty much flat. So you can have like a 12% dividend yield, but if these dividends stay flat, you're not going anywhere. You're just pretty much paying for stability. You're not paying for increasing stability. So it's just a more advanced opportunity. This is just too basic for my taste. So I'm sure some people like it and they're fine with it, but I like to be more active when it comes to, I like my portfolio to be very aggressive, and I don't think this stock is aggressive enough. So I'm gonna say no and pass this stock. So for me, I say no as a watch list. So next company that I have up is PBHC. So we have there the 5 years. So we want to see somewhat of like right there. I'd say about right there. So another cheap stock. So the price for this, I'd say about 1470. So we have here 52-week high and low, a difference of like $7. Excuse me. So the volume is like awful. Market cap, I'm not too crazy about it. Dividend yield and dividend total payment for the year, I just don't like it. I do like the fact that they do have positive earnings. That's pretty good. This is just not a stock that has like momentum or popularity or any type of interest for anyone for that matter. I don't know about retail investors, but I mean, I'm a retail investor myself, but I'm more advanced because I've been doing this for years. But again, I just don't see uh, much upside for even the long term. I mean, I could be wrong. Who knows? Maybe years down the line, it might be better. But for this year and next, I just don't see this stock uh, being, you know, added to a personal portfolio or maybe an income portfolio or any kind of portfolio. So far I'm gonna say no, but I'm still gonna look at a few numbers anyway. So net income, it's gone up, then it's starting to go down. Net revenue I don't have, and for some reason it's not giving me those numbers. So again, 91%, that is just way too much. I don't like it. I'm not crazy about it. So we have operating income, and again, this is quarterly estimates. So I do have annual estimates. So we have here, they're pretty low on cash flow, 63, 69. So it looks like they're tight on cash. So this is why I don't like it. Tight on cash. Earnings need to be better and grow stronger. And we could read a little bit about the company. They're in Maryland, and I don't really care what they do because they just don't seem like they're worth it. Yeah, they're giving rising dividends, but it's just not that strong enough to actually say that, oh, I want to have this stock on a watch list. I just don't see it happening. So for this stock also, I'm going to say no. So I have two stocks left. So the last two I have is MBIN. We're gonna go over that. Merchants Bancorp in Industries. So we have a volume of 100,022. Earnings are pretty strong. That's good. 52-week high and low. I can see that. That's pretty reasonable. That's pretty good. It's a difference of over $25. Their earnings have dropped a lot. Dividend yield payout. So that sucks. You're only gonna get 28 cents for the year. I think if this stock were to be treated more as a growth stock, definitely this will have great potential. But right now, I just don't see it. I seriously wish it had more capabilities for it to be giving interest to other people. But as of right now, I don't see any interest that it can attract other people based on the numbers that I see. So as you can see here, they gave us 7.23 for quality. I don't agree with that. I think this stock is more a momentum stock. I actually think this should be the highest rating, not these two. If you look at these numbers for the average volume and the volume, it's way above the average volume. And then, this is close to a low compared with the price. And then we have a 52-week high. So again, this company seems like they can have room to grow, but they just don't know how. So they did cut the dividend, and that's actually a really bad sign. And that's definitely a huge sign to say, yeah, this stock is not worth it for a few years. Because once they cut the dividend, it's like you might as well cut the company out because, it's just not suitable. It's just not worth it to invest in it. So it says they're a diversified bank, including, so they do, I guess, multifamily housing, okay, SBA lending. That's pretty cool. Lending to small businesses, and then also uh, loans from data origin purchase. So residential loans, I see, and that's pretty much it. So again, this pays only 7 cents, and the dividend payment got cut for last year. And again, look, you only get a total payment of 28 cents. It's just not worth it. So for this stock, I'm gonna say no. Even for the momentum, I'm gonna say no. It's just not clicking on all cylinders. As soon as I see a lot of clicks where it seems like a really good stock, even though they might not pay no dividends, it just depends on the company. So, I thought at one point, again, I thought I could see this as a momentum play, but as of right now, I'm gonna say no. It needs to have more activity, and then if they helped with their cash flow balance, then that would bring some interest. But as of right now, I'm gonna say no. Doesn't have capabilities for other people to be interested in this stock. So the last one up I have is RBB. Please don't ask me what that means, because we're gonna look it up right now. So Rbb Bancorp is a financial holding company. I don't know what the RBB stands for, so I apologize for that. The market cap for this stock is 393 million. 52-week high and low, a difference of about $10. And then we have also the PE. It looks like it's undervalued. A dividend payment for the year at 0.56. And then our earnings per share, we have that at close to 3. So this is definitely a decent stock. But I don't want to speak too soon. But so far, so good. So now we're gonna look at some dividends. Hopefully they raise the dividend. So they have been raising dividends, and they cut it in 2020. So we went from 12 cents to 6 cents, which is reasonable. I can understand. We're in a pandemic and all that. So we have, what else we have here for this stock? We have let's look at some financials real quick. Earnings estimates looks like slightly growing, so that's better than nothing. And then we're gonna look at, where is their debt? Debt to asset. So 88%, 89% debt. Lower than I guess most peers. So then net income looks good. Everything looks good. So if you want a cheap stock, that's pretty decent. I don't like this stock for me, but I think this stock might work well for other people. So again, I'm gonna say it's hard to say yes or no, but what I can say yes to for this stock, if you plan on using it wisely. So I just want to see the dividends again. So they cut that. Okay, so Rbb. So last thoughts and final verdict for this stock. So we're looking at the 5-year. We're gonna put it up to like down there. That's where it looked like it was breaking at. And the price for that was that it's at 1960. So that's only like $1 less than what it is now. And again, for the numbers for the quant, wow, they're getting really good ratings. 6.7, 5 point. It's close to a 7, above a 7. That'll be good. So actually, that's not close to a 7. It's not too close to a 7 if you were to run down. This one, yes. This one, yes. And this one, yes. So 3 overrides the 2. So I guess this is a pretty decent stock. But again, I don't like the dividend payout. But who knows? To each their own. So looks like the balance sheet is slightly going up, which is good. So what I want to say is what might work for me might not work for you, and what might work for you might not work for me. So there needs to be a common understanding and a common goal for a bunch of these stocks to work for us in our favor, because that's the point of investing, to choose good companies for the long term. Especially when you're trying to do this at a young age, it's the best time to do it. So with a PE of close to 7 and the earnings per share 2.9, I would like to see the earnings get a little bit better and the PE ratio to go a little bit higher. And hopefully this market cap can actually go up as well, because it's got potential. You know, it's close to $500 million, so I know it takes time. But yeah, I think I'm gonna say no to the stock for now, and they're just better stocks than this one. So thank you guys for watching. I know I held up a bunch of your time, so I'm gonna cut that off and start ending the program. So again, last and final words. Thank you guys for watching. Thank you guys for tuning in. Like, subscribe, or comment. Any feedback is appreciated. If not, I'll just see you guys in the next one. I hope you guys learn a thing or two and stay safe and invest smart. I'll see you guys in the next video.